Alright, how about now? Good night, good night. Sorry about the delay. Having a bit of a mic issue. So, want to know if the mic is fine and it's well. Mic check, mic check. 1, 2, 3, mic check. Mic check. 1, 2, 3. Alright, I'm just gonna get with it. Let's hope it's fine. Yeah. Okay, okay. Got it, got it. So, uh, yep. Alright, good. Nice to hear that my mic is fine. We must remember now we have a little delay where YouTube is concerned. So might have maybe have a 2 minute delay or a 3 minute delay. So whenever you text, I may not get that message same time. Alright, so that is the issue that we have here. Alright. So we are entering rabbit season and I just want to elaborate more on that, what I mean by that. This is the season where we are not going to get a lot of big swings, like a big move, volatility decreases. So basically, the same attitude or mindset that we enter in the market in, like in May or June, sorry, or May, say February, March, right? We have to have a different expectations, right? And the thing is, um, this would be my first summer with you guys, right? Because this channel is fairly new, and I like to take you step by step. You know, I will still try to do this session each and every Thursday during this entire summer to keep you guys account safe and sound for September, right? Because in a small group that we have, JMT, the link will be posted in the description for you to guys to join it. Last year we have a similar issue like this where we we had some trade plans for September and last week in August, and by the time we reached that um, specific time, there were many blown accounts. Many accounts were lost during that time, and that's why I'm stressing in this year to, you know, that's why I'm stressing this year to try my best to keep the younger traders account afloat, right? For when the seasons begin, when we start to hunt deers, you know, hunt cows, big animals. Now we are just in rabbit season, rabbit, chicken, birds, right? So we might make we might maybe get even 100 pips for the week, right? 150 pips per 150 pips for the weeks, and we don't used to that, right? So we just take our pips and just go, right? So I'm gonna go into planning into 6 weeks ahead, or we are going to be planning um, for September and also the ending of August, right? But during that 6 weeks, 6 to 10 weeks ahead, we will be doing trading as we go along, right? So basically, we are expecting a bullish, no, I'm expecting a bullish price action going into September, right? So my thesis is we are going down for the next 6 to 10 weeks, right? This is my thesis. We are going down for the next 6 weeks, but it's definitely tradable. But we are expecting, reason why I draw this stair stepping formation, I don't really draw it aggressive, because as we know we're reducing volatility, so we are looking for these just crawling down. Like we'll say this is the impulse, let's say this is the impulsive move. Let's change the color, right? Let's say this is the impulsive move and this is the correction, and we are looking for our next impulsive move on the way up, right? So with that being said, I'm just trying to gauge you guys in planning ahead, way ahead, where you can set yourself up for bigger things ahead, right? That is really many traders fail in the planning. They fail to plan, right? Whether there's use a bull or a bear, you basically fail to plan. And I'm not really going to get in a lot of um, technical, right? Because basic price action trading, I think that any new trader, amateur trader should be well aware of basic price action, right? So we are going to go in details, in little more details, based on fundamentals, right? This year might be a little bit different, and I'm going to keep on say it. This year is an election year, and we understand say that this year we face a pandemic, and this is my first pandemic. I never been into a pandemic situation before, so this is quite new for me, right? And I realize how the market dealt with that condition, right? And many of you probably we might never see this a next pandemic again, right? But nevertheless, we are going to use our technical indicator along with our fundamentals, right? So if we get our fundamentals aligned, we then go to our technical to get involved, right? And this is just basic pivot points that I'm going to get involved with right now. Because we are on the New Zealand USD, right? And this is where we're talking about certain language where we talking when we talk in our forex peers, right? When we talk each of us in our forex peers, like we'd say beer and the dollar, right? So beer and the dollar meaning Aussie dollar, new Kiwi dollar going up, right? Aussie dollar going up, pound dollar going up, right? So many times when I say that I'm a beer on the dollar and I'm buying up these assets, many persons may not understand that, right? So you're a beer and yet still you're buying. Yes, but I'm beer on the dollar. Beer on the dollar meaning I'm selling the dollar, right? If I'm a bull on the dollar, that means I'm buying the dollar, basically. So with that being said, I'm just going to go through the pivot points as a bull, right? You try to buy. Buying in zone is M2 and central pivot point. Right? Central pivot point. Right? And this is where I'm just going to go to the chart very briefly, each and every one, and identifying buying zones and sell zones and see what the price action have done between those times. And this is a 4-hour time frame. I'm just going to highlight the bull zone and the bull zone where we would get involved in the market, and the two prices where we look to get involved. This is M2 right here. I'm just going to circle them, right? M2, and we have pivot point, right? Cool. We have pivot point right here. We didn't get the M2 right there, and we have central pivot point right there, and it went all the way up, right? All right. There's two OOP, right? Many of my students might understand what I mean by OOP, which means the market open out of position. The OOP stands for out of position, and that clearly means when the market is out of position, we know how to position ourselves to get in the trade, right? We use moving averages to get in the trade when we are out of position, right? So we have the 21 moving averages, the red one right here, 21, right? And the green and the blue one is the 55, right? So when the trend is aggressive and it's out of position, we just each pullback to the trend line is a buy, right? Each pullback to the trend line is a buy to the 21 moving average. That is when the market is out of position. Cool. So if you're a bull, we have M2 and we have CPP and we have the 21 moving average, right? So we have three tools that we use to get in the market, right? But we drill down into a lower time frame. To be a seller, you'd have to position yourself as a M3 and also a CPP. And nevertheless, if the market is out of position, we use the 21 moving average right here, right? So we are just going to go through these $6 pairs that we have right here, and we're just going to identify our buy zones and our sell zones. Let's get it up. And we are going to go to the euro dollar first thing, right? And first, as you look at this, we're supposed to can identify price formation, right? Our price patterns. And as we see this right here, we'll have a shoulder. This is a head. So before all of this, to the right, predict. We are predicting the future where we want to get involved, right? If this is the left shoulder, this is the head. So we are predicting the right shoulder. So we know this. We are predicting this ahead, right? Way ahead, right? We see this left shoulder, we see this head, right? Before we see all of this, we say, hey, we want it pull back, right? And make the right shoulder. But based upon our tactics, the way how we get in, right? We said we would preferably it pull back right to the M3, right? Right into the M3. And if you're a bull, if you're a bear, right? You get the exact price, which is 1.33, right? And there's nothing else to do more than just sell. And you drill down into lower time frame and get our 50-minute time frame and get our execution, right? As a bull, the market open on M2 right here, which is all the way right here. Execute and all the way up, right? But remember now, As a bear and as a bull, you must be thinking what bulls are thinking, right? And as a bull, you must think what the bears are thinking, right? So this is, we can go through a chart real quick and we know what we want to do this week, next week, right? So I'm going to plan ahead. So right away we are thinking next week, change the color. Next week buy zone. Next week buy zone is right here. Next week buy zone is right here and we're taking it down. Cause we're already in Friday. The week has already finished. We're already in Friday. So we're thinking next week. Right? Sunday we have Monday in Asia. Right? So this is our new buy zone. So we are thinking down. We are thinking down, up, then down. Right? Next week buy zone. We are going into another asset as a dollar. Right? Down, up. We get our first entry right there. Didn't went anywhere. Coming back shallow. Right? This is our next buy zone. Sorry, sell zone. Right here. M3. M3, and we have central pivot point right here. So we are thinking this. So in less than 5 minutes, I can just go through the charts and I know where my price levels are, where I want to get involved in the market. Just looking for price action to get in and execute. Right? So, in other words, trading can be difficult and trading can be easy. It's how you make it, right? Or you plan it or you put it to be. So, as I'm going to the charts, I know what I want to do next week. I'm a bear and the asset, right? If you're a bull, this is the price. You're looking to the price come right down here, right? Right at M2, Sunday, right? Because the market open Sunday here in Jamaica, right? In Asia, the market open on Monday, right? So this is a, if you're thinking bullish, you want the price to come down here, and you're thinking this, right? But as a bear, you're thinking this down, wrong color. As a bear, you're thinking this down, right? And as a bull, I'm going to use green for bull, right? You're thinking a double bottom right here, a bit too far. Let's fix it right here, and you're thinking this, right? As a bull. So each one has their price levels to where they will execute their position. So in less than 5 minutes, I can go to all these pairs real fast, and just show plan in advance next week where we would want to get involved, right? Here we have it. M3 down. I'm thinking this right there, or somewhere right in here, right? And I'm thinking this bullish trade plan. So far we have the M3 right here, M3 sold at the top, boom. If you have done that, you would have been up, let's see, somewhere up here to get involved. 250 pips, you'll be having the bank already. 250 pips. If you have, you'll be having the bank if you execute your trade planning. And this is the way how I use pivot points. And this is M2 right here. M2 bulls, right? Bulls have their have their chance. They execute it well, right? And it went up. But bulls understand that bears live here, right? Bears live here, so they are expecting to get some challenge. They could make some pips, yes, whatever amount. Depends on the price action that we have up here. You could exit the trade for a small profit, right? Yeah. But you see, each bears and bulls, each one get their turn. Why do you focus on the USD pairs? Not necessarily. We can we, we can go to any other pair. Pound pair, yangs, you know. We can go to any pairs. If you I wouldn't mind you give me an asset what I can look on and I could just basically put my thoughts on it and how I would trade it if I'm a bull or I'm a bear. Right? We can go on yens, Swiss, any asset. Any asset. Right? It remain the same. Uh mm, can go on Swiss franc, right? It remain the same. Risk on, risk off. It's because rabbit season. Okay, no, all right. The rabbit season is is straight across the board, right? When I mention rabbit season, I mean it's straight across the board, right? You have artist Swiss right here. Probably too much lines, right? When I mention the term rabbit season, I mean it's straight across the board, as in the volatility, right? The 400 swings, the 500 swings, right? Yeah, that is what I'm talking about when I say rabbit seasons, right? Because if we zoom this on a 4 hour time frame, right? We don't get this use from the beginning of the year, April coming up, right? We get huge move, right? Huge move during the summer. We are gonna. I'm expecting small move like this, just up, no, not much, yeah. If it coming down, sorry. If it going up, up, you know, just small move. Maybe then it go up, you know, right. So basically, you're gonna get your mental in the correct order, right? Being a trader, remember now, being a trader, we have to be prepared to trade in different market conditions, right? We have to be prepared to trade in different market conditions. All right. We had a question right here. All right. All right. See, I'm just gonna try to see if I can interpret your questions. Your question. All right. All right. Based on my style of trading, I'm a macro trader, right? I'm a macro trader, right? Macro mean big, right? I I looked at what's going on right around the world, not just here in one country, right? Right around the world, right? In simple terms, I can just give it in simple terms, so you can maybe understand what I'm saying. The market is either risk on or risk off, right? Risk on, right? Risk on or risk off, right? Now, when the market is in a risk on mode, right? Is in a risk on mode, right? The safe havens currency, right? The safe haven currency, all right. Let us write it. Safe safe haven currency. Sorry about that. Right. All right. Safe haven currency, right? And the safe haven currency is what we know as is what the safe haven currency we call is CHF, which is Swiss franc, right? Japanese yen, right? This is JPY, and also USD, right? But where the USD concern, it's a bit different. Where the USD concern is a bit different because it's also known as a it's also known as the world reserve currency. And 90% of transaction that is done around the world is done in USD, right? Whether the countries you are doing transaction with South Africa or Venezuela or Brazil, when trade is being done, it's done in USD, right? So that's why this asset, the currency just is kind of different from from the rest. All right, let me see. No, 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 no. It's not necessarily about Kelvin type of question. No. All right. When I use the term valid, when I said rabbit season, right? And I understand. I like the question, and this might be your first summer, right? This might be your first summer. When I said rabbit season, is the asset is straight across the board, right? We're losing volatility straight across the board against the Swiss, the yen, the USD, the Kiwi dollar, the Kiwi, Aussie, CAD, straight across the board. All right. When does Americans go for holiday? Right? When Americans go for holiday. Americans go for holiday July, right? And over in UK, right, or the other side of the world, they go for holiday in August, right? So those 2 months, well, the investors are the big players. They just take out them yachts or them jets and them just have fun during the summer, right? Not to say that the market will not move, but it won't move that much, right? It will pick up back in September when everybody return to work, right? Just like when we have school get holiday, right? Summer, everybody come out and play, and September back to work. It's just basically it in a nutshell, right? So that should take care of that question, right? And we will see the volatility increases in September, within the last week of August. We will prepare ourselves and we condition ourselves for different market condition, right? Different market condition, right? And also, June is the second quarter of the year, right? June is also the second quarter of the year, right? Cool. So we have a lot of profit taking and a lot of things like that. All right. Back to what I was saying, um, Francis, right? So based on my style of trade, I'm a macro trader, right? And when I'm through with this session, you can go back and you can check your charts just to see if it correlate with what I'm saying to you right about now, right? So we have the safe haven currency, right? And which is known as the Swiss franc, the JPY, which is the Japanese yen, and USD, right? When there's uncertainty in the market, the demand for these currency tend to increase. We have a significant increase in demand for these currency. So therefore, these safe haven currency tend to get strong, right? And it kind of this also have to do with behavioral finance, right? Behavioral finance. Investors not willing to invest. They feel more safer with their money is in any one of these three currencies more than another currency, right? So with that being said, the following currencies tend to get weak, right? In a risk off situation, right? So we'll say, let's say we'll have CAD, CAD, we'll have CAD, we'll have NZD, right? Which is New Zealand dollar, Aussie dollar, and we would have AUD, right? Which is Australian dollar, and we have Euro, EUR, and we can have GBP, and we can have ZAR, Tazar. We are going to have some exotics now, and we can have, yeah, we could go on and on, right? So these currency that in the yellow tend to get weak, right? And I can make a quick check and go through the asset classes where the Swiss franc, the yen, and the dollar, right? So when there's a risk on situation now, right? These are the investor then, in other words, willing to take risks, right? Willing to take risks. So these assets tend to get weak, right? So when these assets tend to get weak, automatically what happens to these assets now? What is going to happen to these assets? These assets then become strong, right? Like what we have here with the Aussie Swiss, right? Aussie Swiss, right? This play is a risk on. As it gets strong, Swiss franc gets weak, right? As it gets strong, Swiss franc gets weak. Remember, Aussie is at the front, Swiss franc is at the back, right? So, just for relative term, for clarity with some understanding, right now we are going to go on. Right now we're on Aussie Swiss. We are going to go on Aussie yen, and we are going to go on Aussie dollar, and we supposed to see one direction up, because remember Aussie is at the front, right? Swiss franc, the safe haven currency is at the back, right? So we tend to see, we expected to see one direction, right? So we're just going to do this just for relative understanding. All right. No, I'm going to go Aussie scan. Aussie scan. Right? Aussie scan. Let's clear it up. This might look a bit messy. Let's clear it up. So we was on Aussie Swiss just now, up. Right? Want to see the direction? Up. Alright, we are going to look at Aussie yen. We're going to look at Aussie yen, where it is. Aussie yen, 4 hour, decrease the size. What do you see? Up, right? And we are going to go on Aussie dollar. Up, right? As the dollar up, as the yen up, as the Swiss franc up, right? And this is a risk on environment. When a risk on environment, safe events get weak, commodities, currency gain some strength, right? So I hope that clear it up, right? I hope that clear it up. Right? Alright. I'm just going to zoom it out a little bit. And I'm going to change the color. So in a risk off scenario, pandemic, we have uncertainty down. Right? Uncertainty down. Right? Up. So based on market condition, based on market conditions, I know what to do before I come to my charts. I know whether I'm gonna buy, I know whether if I'm gonna sell. Right? Life is good, up. Things not going so well, down. Right? So I just come, the charts now is just the technical part of it where you look for price, higher lows or lower highs, lower lows to get in the market based on that particular. Right? So as a mature trader, I like to encourage you guys to just like do the work first before you come to your charts. Don't be reactionary. Don't allow your chart to tell you what to do. Right? Don't allow your chart to tell you what to do. Right? Be your own analysis. Right? We have a question. Where do you it's on the internet. It's on the internet. To be honest, it's on the internet. I use trading economics, I use investing.com, and I use, you know, anything, and I also read central bank policies. I read FOMC minutes, right? I just use all of these. It's just there. It's just you to just do the work and just sieve it out, right? And get the understanding. They might sometimes the reports might have some words but they might don't understand. Just Google it and it will break it down for you, right? But it's the thing that you're not putting in the work, right? Many traders won't put in the work, right? Many traders won't put in the work to get their bias, right? And them don't and the next thing, they don't give them self time to grow in the business, to know what January is like, summer is like, December is like. The first month account blown, right? They don't come to the market with the intention that is learning. You enter the market with training wheels. You're not going to make any pips like that right now. You're entering the market with training wheels. Right? So when you enter into the market with that thesis, with that mindset, you're entering the market with trading wheels, with a small account, 500 or 1,000, right? Because you want to be able to go through different market conditions, right? As I mentioned before, last year summer, we have a small group, right? I'll post the link in the description, right? And I was stressing about this time of the year. 'Cause remember, all was going well. Every May, April, all was going well, right? Because that was a different market condition, right? The market condition was different then. All of the pips that they made during those period in the summer, everything throw away. When I say it's time to hunt deer, rabbit is over, we are going for bigger things. Very few, if not all, very few, very few, it's there to hunt the deers with me. They throw it all away. And when you enter the market with that kind of mindset, it affects you emotionally, right? It, it affects you emotionally. So you have to be so prepared, right? It look easy, chart going up and down, but we also have to take care of our emotional side of the trading, right? So that's why I encourage you guys to just plan ahead, way ahead, way ahead, right? So you're looking for a pullback, let's say, let's say, Fib, right? You're a bull, you're still a bull on this asset, but you're a bear on the dollar, right? Let's say you Fib it, right? You're looking for some price action to get involved in the market, right? So we can draw this here, right here, right? And we can identify all of this here, right here. This is my sweet spot. 382, 50%, 618. Right? And we can just look left and draw some areas across right there. Right? Basic. Right? And possible, even all the way down, and we could see a down the bottom. Right? But if things look good, you're a bull, you're looking to get somewhere here, somewhere here, somewhere here, somewhere here. Right. Simple planning, right? As a bear, change the color, let's use red, use pink rather, right? You're thinking like this, up, down, 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 right? So it's just, to me, it's just like a delicate dance. Bulls need bears and bears need bulls. Bulls need bears, bears need bulls. Remember, bulls sell high, bears buy low. Who is gonna take up the price for the bulls? Sorry, who is gonna take up the price for the bears to sell? The bulls. We need the bulls to take the price high so the bears can sell it. Right? So this is where we're gonna just cut it for the night, and thanks for attending. Please like, share and subscribe, and please click that notification bell so you get notified when I hit the live stream button. Right? And I hope this information help you during your trading career. Right? And I hope to see you next week. We'll be still here hunting rabbits until it's time to hunt deer. Right? So keep your accounts first. Keep your account is very important. Account preservation. So thank you.